A pair of tech unicorns making splashy debuts on the NASDAQ and NYSE today on Friday. But still, stocks, well, Wall Street only managing to eke out small gains. Right now, the S&P 500 up 0.2%. Let's find out why and take a closer look at these two IPOs. We're joined by Hilary Kramer. She is Chief Investment Officer at A&G Capital. Hilary, great to have you on this particular day when it's so busy. Choppy session. So why are investors, stocks have been going in and out of positive territory. What are the pros and cons that they're bouncing off today?
Well, we're at the end of a week. We have a long weekend that we're going into. Traders like to sit by the sidelines, especially because next week is a huge week when it comes to Amazon on Thursday after the bell. Everyone wants to see the other industrials now that we've seen Honeywell, 3M on Thursday, Illinois Toolworks, ITW. A lot of sideline sitting, a lot of concern about North Korea. That factors into a lot of the trading and investing as well. I think there's a lot of interest in Washington in the Mueller report.
And Pinterest, an IPO, making splashy debuts on the NASDAQ and NYSE today. Pinterest shares up now 27%. Zoom was opened 80% higher. Right now it's about 75% higher, 76% higher. Pinterest losing money, Zoom actually making some money. So compare and contrast. Which one do you like better?
I like Zoom better, ZM. And the reason is that it's a company that has a real business model to it, which is this video conferencing, which is the direction we're going into. This is where the growth is taking place. Zoom is competing against Microsoft, against Adobe, against Cisco, even Apple to a great extent. So what's the play here? Zoom will be acquired. It's a takeout, and that's why there's so much excitement. And whoever takes them out, even if they already have market share, might want that management team, might want the excitement around what Zoom brings.
As for Pinterest, social media company, it's got a lot of followers, but it's not making money. We saw what happened with Lyft, and it seems though investors, even though it rose a little on the debut, it's been really declining stock-wise. What do you think is in store for Pinterest?
Well, the problem with Pinterest is very fundamental. It's like scrapbooking. It's a very difficult site to use for most people. It's very interesting. It's very inspirational. There's been some concerns about censorship on certain areas of Pinterest. Pinterest doesn't really have a model. It's not an Amazon. It's not just directly, I see something, I'm going to make a purchase. It's not a community. There aren't icons as part of it, sort of pop icons. Pinterest is folksy. It's interesting. I'd go with Etsy and Amazon any day of the week.
Okay, so thinking about that, go to Etsy or Amazon. But if you are thinking about Pinterest or are thinking about Zoom, what should investors be doing? They're looking at these stocks with this first day pop.
I would stay away from Pinterest here, especially because the last round valuation before the IPO is really where the stock is trading right now. So that tells us everything we need to know. I wouldn't go into Pinterest. Zoom, ZM, we could see some selling. We probably will see some selling. The stock will settle down, will find its way. That would be the time you'd have your entry point into Zoom. It makes sense to be in a company like Zoom. It's exciting to be in IPOs. But take your time and be measured and understand that there are other IPOs coming along, and then there are some that have already taken place in the tech space. Look, Levi Strauss, that one might want to go into. So take a look looking backwards at the last 6 weeks and say, hey, maybe there's something there that it's the right entry point.
With Uber coming up.
Oh, that's Uber. Uber's going to have the same problem as Lyft, right? The numbers don't lie.
All right. Okay, we'll have to leave it there. But thanks a lot, Hilary, for sharing your thoughts on these two big IPOs. Our thanks to Hilary Kramer of A&G Capital. I'm Fred Katayama, and this is Reuters.